This is Eric Muathe with Muathe.com. Let's take a look here at an example of how the RSI and the moving averages can all be synchronized, and how, in my opinion, the RSI is a better tool. Not always, but most of the time, in my opinion. Just for the record, this is where markets are trading for right now. Alright, let's take a look here at RCL, and I'm going to draw a single line, just like the 50-day moving average is a single line, and I'm going to draw the line as such. And what this line gives us is it gives us a couple of points. For example, here we see that the price has dropped below the 50-day moving average. Now the blue line is the 50-day moving average, and this break here synchronized very well with the break of that RSI trend line. So at that point they agree. We come again and we touch the 50-day moving average here, and we are rejected. The same thing happens to the RSI single line that is shown right there. So again, those two areas do align, but now we see an area where the RSI is more reliable. The RSI is telling us this is an area of resistance, while the 50-day moving average has now changed and is telling us that this was an entry point here. Now, of course, time will tell which one is more accurate, because it doesn't mean that the 50-day moving average is wrong, because down the road the RSI can move above the red line and prices can continue moving higher. But for now, in my opinion, the RSI is proving to be more reliable. Alright, let me show you one other point of view. It is the price trend line that might be confirming the RSI's point of view. So there's a daily closing high there, connected with this daily closing high, and we get a trend line that looks like that. Something like that. So that's the trend line we get. In fact, let me make that line a little bit thinner than, so let's go a little bit thinner so we can see it clearly. So take the daily closings and we get a trend line that looks like this. So which means that the RSI as of right now is more reliable compared to the 50-day moving average, because the RSI is also suggesting that this is an area of potential resistance or future breakout, which is consistent with what the RSI was telling us as we come into this backtest failure area. In other words, I've always found in my research that the RSI is a better timing tool. Eric Muathe, Muathe.com. As always, good luck, peace, and blessings. EACS.